All right, what's up, everybody? This is the Friday Mastermind. Now, for 7 years, we have been every Friday at 9 o'clock, bringing in amazing guests. Sometimes they're authors. More times than not, they are mortgage professionals. We've had an increased number of real estate agents, and today we have the tax coach, who I will bring on stage in just a minute. Before I do that, Deb Bird, you've got to not only represent yourself, but our wingman, Todd Bookspan, today.
I know. I'm excited. It's the last day of May. We've got one more month for it to be kind of mid-year. So hopefully everyone's crushing this month and ending the month strong and have lots of closings today. So, and go Mavs.
Go Mavs. Yeah.
Yes.
By the way, if you are a basketball fan and watcher, who is your team? Who are you rooting for? So with that said, guys, today's call, when I think of the North Star of this call, it is expanding your financial literacy so that you, as a mortgage and real estate professional, can be more valuable to home buyers. You can be more valuable to homeowners. We might get some tips and strategies as a mortgage or real estate professional on how you can be smarter around taxes and financial literacy as a whole. I'm going to be introducing Barbara. This will be the first time I've interviewed her for our channel, although I have a feeling, and I hope it's not the last time. She was introduced to me by Socia Vela. So everybody that watches this show, most of you guys know who Socia is. I think, he is one of the best mortgage advisors in America. He's a mortgage coach. He's done thousands of TCAs, but he's like Dave. Barbara, how long ago did he introduce us for the first time?
I don't know, maybe a year ago.
Yeah, so it's taken us a year to get here, but then we actually went out to dinner with Sosie and his wife and another couple local interior designer, and I got to meet you in person, and it was really nice meeting you, and I can't wait to have this conversation.
Thank you.
So why don't, just for the audience, and most of them are loan officers or managers and leaders of loan officers, why don't you just give us a few minutes on, your backstory and what you do, and then we'll get into a conversation.
Yeah, I'm Barbara, the founder of Your Tax Coach. You can find us on any social media at Your Tax Coach if you just want like fun tax tips and tricks. But I started in the industry in tax like 14 years ago, and I never wanted to be an accountant, but I had gotten pregnant in college, and my career counselor said, I had asked them, what's the number one profession where the day I graduate, I'm going to have a job? And they said accounting. And although I was bummed about going into accounting, that's what I did. And quickly realized like the industry needed a lot of help. As most of you probably watching know, like your accountants probably never get back to you. They're hard to get a hold of. If you email them, they wait like 2 weeks to respond, or they talk to you in a way that like you have no idea what they're talking about. So it's like just too much jargon, and they're not really saving anyone money. So I really like flipped the industry when I started my company, and I was like, all we're going to do is save people money, communicate really well, and teach and educate people so that they can learn more. And now here we are. We have 30 employees in 16 states and thousands of clients. So it's really fun.
So wow, that little value prop you gave, what were those three things? I heard communicate really well.
Money.
Save people money.
Communicate well.
Mm-hmm.
And what was the third one?
So really like all that I want myself and my team to do is communicate really well, educate our clients so that they can make better decisions and save people money.
Boom. So mortgage professionals, how about that? And then one of the things that we're talking about, and I don't know how familiar you are with this, but the NAR settlement in the real estate space. Are you pretty familiar with what's going down there?
Yeah.
So the thesis is buyer's agents are going to need to do a better job of communicating their value really well, and go beyond the transaction. Like it's great that you're a local market expert and you have great negotiation skills, but we think like one of the biggest things that homeownership brings is net worth, financial freedom. That's how most Americans achieve financial freedom, is through their principal residence, and some buy more properties. but doing a better job of communicating their value, of helping realtors. You know, I work with a mortgage professional, and together we help families achieve financial freedom faster. Any thoughts on that?
Yeah, actually, Brandon and I were talking about this last night, and we were just chatting like, oh, have you lost any real estate clients? Because, you know, if they're losing money. And I'm like, well, typically our clients are already communicating their value because we are like a more luxury accounting firm. So the clients that we have know how to communicate their value. And to what you're saying, like, as long as you can communicate that well to your buyers or potential clients, you will actually make more money out of the settlement, because kind of the people that can't communicate are going to have to go away because they're going to be out of a job. They're not going to make any money.
Yeah, right. No, concur. I'm sure Deborah Bird's going to go into this more detail, but the fact that you've become pretty big on social media, when did you start leveraging social media? And it looks like Instagram looks like your number one social media platform, but like, when did you start doing that? And what is your top social media platform?
Yeah, so I started Your Tax Coach 1/1/2020. So from that day, I started Your Tax Coach Instagram. And I had really kind of known before that, just from like my personal page, of like, people are inherently nosy and they just want to know like what you're doing and who you are. And so I just started posting like the coffee I was drinking for the day or the workout I was doing, like really nothing about tax. But then, you know, I started posting like, today I have meetings with this person, and I'm recording a podcast with this person. And everyone would always comment back on stories on Instagram, like, oh, I love that person, or it's so cool. How do you get on so many podcasts? You know, like, people are just curious. And so that's really how I started, and really just leveraging people's curiosity to have more engagement, but then also realizing like people love controversy too. So when we post reels or like green screens or information, we're trying to like get a certain audience like a little bit riled up, nothing too controversial, but it's like, it could be like, do you want to make your kids millionaires? And it's like, well, no one's going to really say no to that. But some people are like, I don't know, must be nice to be able to make your kids a millionaire. And it's like, well, you don't know my story, so stop trolling. But yeah, I don't know. We love social media. We try to make it fun. I love Instagram. So yeah, we have the most amount of followers on Instagram, but we also leverage TikTok as well. I'm kind of less familiar on TikTok. My team does all of my TikTok, but we get a lot of clients from TikTok, weirdly enough.
Really?
Mm-hmm.
So Bird, anything you want to go before, you know, I do want to ask some basic financial literacy questions, but hey, you got to be chomping at the bits to ask her some social media
I
questions.
mean, let me tell you, I was stalking her last night. I'm sure you could tell, Barbara, because I was like, I sent a follow request and then I'm on LinkedIn, and I went to LinkedIn first because I was like, okay, she's a tax strategist. She's probably not on the gram or maybe even TikTok. And then when I saw your Instagram, I was like, holy cow, a tax professional who actually is, you know, has some personality and has fun on social and is playful and also beautiful, helps. But I love what you're doing. And I hope everyone who's listening can just take a nugget that creating stories consistently, the beauty of stories is it doesn't have to be perfect or aesthetically matching the rest of your feed, because it doesn't live forever on the feed.
Mm-hmm.
And it's a way for people to just kind of like what you said, be nosy and get to know you. And they want the behind the scenes footage. I think the rise of reality TV is what has created this, you know, new interest where now we get to see like behind celebrities, you know, closed doors, which we used to not be able to do. Which, good job, Dave. I've noticed you've been picking up on your stories with showing us your walking views at the beach. So good job. See, if Dave can do it, you guys can do it.
You've been pushing me for a long time to
I mean,
do stuff like that. So
yeah, I'm hoping for the day
I'm
where
playing.
I want to see where you're on that whole, when Ken Perry talked about y'all's morning routine with the acupuncture mat, and
That's
one of these
probably
days.
not gonna be on the gram.
I have the acupressure mat too.
You
Yeah,
do.
and it's awesome.
Yeah.
Yeah, actually, I need to use that more. But
You're not going to do the shirtless Josh Metal video in the Facebook group?
no, Josh could
Iron
do
Man.
that. And if I look like Josh, I would do that. Yeah. So let's do this. So first of all, Brendan Bracken, thank you for that question. And I promise to get that answered before the call is out. And anyone watching this, whether you're on Zoom or Facebook Live, put your questions down below. Also, if you're watching this in YouTube, which is our biggest audience, put your questions down below. We want to know what they are. We'll try to get them answered. And I have a feeling that Barbara is going to become, we're going to do this again. So, but before we answer your question, Brandon, I want to know, so think of everybody watching this, they're like SOSI, they're mortgage professionals that go beyond the transaction. Like they think, hey, just closing a loan on time and giving people their closing cost, that's a transaction. Those are table stakes. And, SOSI's given families a mortgage coach total cost analysis. And then he's also giving them advice. What, in your opinion, what are some of the things that every mortgage, like I always talk about turning loan officers into mortgage advisors. What do you think mortgage advisors need to know? As an accountant, as someone who's been a mentor to SOSI, what are the checklist of basic literacy these mortgage advisors should have?
I think they need to know more about tax returns and really how they flow into each other. And if you can know more about someone's tax return and why they did a certain transaction the way they did on it, maybe more people could qualify a little bit easier. I think a lot of times vehicle payments kind of get messed up where really it's being paid for by the business. So maybe it shouldn't hurt them on the personal debt side. A lot of it, at least on our end, we work a lot with business owners and real estate investors. So we don't have just W-2 only clients. And I know W-2 is a lot easier to qualify for home loans, but looking at it from a business owner perspective, it's so hard for them a lot of times to get qualified until they can call us. So call people's accountants more often to get clarification on things, have them write more letters. I also know it's weird. Some accountants just won't write letters for mortgage people. Sometimes we have to certify buying this house is not going to affect their business. And I know because I'm in a lot of accounting groups, a lot of CPAs will not write those letters because they think it's too much liability. But find an accountant that will write those letters. With working with SOSI, there's some people, they're not our clients, but we can easily write that letter. It's not hard to look at someone's business and what their income and expenses are and be like, no, this home loan's not going to affect their business. So just have working relationships with other accountants that can teach you, train you, help work you through their tax returns to help increase their income, lower their debt to income ratio, and get more people qualified.
Yeah, I loved all of those things. I hope you guys wrote those down. And I would push anyone listening to it, do you have a checkbox on that? Do you have I built my mortgage career as an operator with having lots of relationships with CPAs and financial planners and being the go-to lender for them. But to be that go-to lender for them, you need to have an uncommon level of savviness. So there's a lot of value in that. D Bird, anything you want to call out there or any questions? Follow up?
The first thing that came to my mind just with the wave of potential baby boomers that may be dying off, I don't know how else to say that where it doesn't sound mean, but the lack of knowledge of transferring property and how tax, is involved in helping, whether it's first-time home buyers or these millennials, which is the typical age, 35 of those buying their first home. They don't have someone helping them for their parents who could, if they did pass, what do you do? And what should you look for? What should you be educated on, hopefully before that happens, that you could provide knowledge on from a mortgage professional standpoint, but they usually don't know what to say or what to share. So I'd love your insight on that, just on transferring of property.
Yeah, from a tax perspective, we don't like when anyone transfers property before someone passes away, because let's say your parents buy a house for $400,000 and when they pass away, it's worth $1 million. If you don't get the house until they pass away, you get it for the basis of $1 million, which means you could sell it the next day for $1 million and pay absolutely nothing in taxes. Whereas if they transferred it to you before they pass away, it could be a taxable transaction, and they would have to pay capital gains tax on that $600,000 gain before they pass away. So, of course, there's going to be like extenuating circumstances where maybe it makes sense to transfer a property before someone dies. But 9 times out of 10, it makes way more sense to wait until someone passes away. And there's other things like a lot of our clients will be like, my parents are older and they don't want to be landlords anymore to people. And it's like, okay, cool. You just be their property manager, or you do the work for them. They can pay you a couple $100 a month, but have them keep the property in their name. So there's no taxable transaction until they pass away.
Very smart. And have you seen a rise with the younger demographics just from content creators and influencers, like a younger age group that are self-employed and have zero, like this is a pretty big topic left out of the school system and was probably the last thing that I really started to learn just even in my career in this space. And it's crazy because the amount of money we spend in taxes, it's like taxes, interest, and insurance is like where a lot of money goes, that if we could just get better with. So anything that you would recommend for like first-time home buyers, are there any special tax credits if you're buying your first home or your primary residence that we should know about?
Those are state by state or even like county by county. So those are all so different. So check in the county that you want to buy in. But if you are buying your first home, I think a lot of real estate agents and mortgage officers get this wrong, whereas they kind of push like, oh, you're going to save money in taxes if you buy a house, when that might not be true because the standard deduction now is so high. They might not be getting that mortgage interest as a deduction on their tax return. So don't say that unless you really know if they can take advantage of it on their tax return, because then we as the accountants, like we get this excited, 27-year-old that just bought a house and is like, yeah, I'm going to get a refund this year. And they're really excited. And then we're like, oh, you don't really actually get a benefit from buying your house. And then they don't like us. Instead of it was like, no, it's your guys' fault. You told them. So yeah, I mean, the standard deduction is so high, maybe not a lot of people will benefit. But also, Dave, to expand on your question about like what loan officers can do with accountants. So like building that relationship with them is so important. But even after the transaction happens, if like you guys are the ones seeing everyone's tax returns first, you guys see everyone's financials, you see their profit and loss, and you probably can tell when they're a hot mess, So like if you have a hot mess client, after the transaction, how much more valuable will you be if you're like, hey, I know this tax strategist that could save you $10,000 in taxes, 20, 50, 100, like whatever it might be. And just you making that connection with someone, they're now more likely to work with you again because they're like, oh man, Dave introduced me to Barbara and saved me 30 grand. I'm going to use them again on my next transaction. Or we save them enough money, like 30K, that they can then use that as a down for another house. So they like now can be building wealth. So don't use the transaction just for like during buying the house, but like extend it to after and just provide as much value as you can.
So real quick, can I just add that what things do mortgage professionals, like what should they be looking for in the tax returns that would be like dead giveaways of like, here's a great time to, refer them to a tax strategist? Is there anything in particular that comes to mind?
Yeah, if you're looking at a personal tax return, there's a line item called other taxes. And it's so tricky from the IRS because there's a line called tax and there's a line called other tax. And they don't really want you to know what other tax is, but usually it's self-employment tax. So if they have a high number, like 10,000 or more on that other tax line item, send them over to a tax strategist because we can probably get them that amount back. So that's number one, if you're looking at a personal return, other taxes. But also, if you just see that, they had to make a big tax payment at the end of the year, or if someone's sending you a spreadsheet for their financials and not like an actual P&L or balance sheet from QuickBooks, they probably need a better bookkeeper. And like even the cost of a bookkeeper, the amount of money that they can save you in taxes because they're categorizing things correctly, Like even just a bookkeeper will help too.
So guys, I want to unpack some things and make sure, just remind everybody of a couple best practices. So first of all, I hope you guys wrote down the word tax strategist. You know, as a mortgage professional, do you know CPAs and accountants, and are they tax strategists? Because there is a, just like there's a loan officer and a mortgage advisor. They're not just words. Now, are there people that use those words that really aren't strategists? Yes. But I think with a conversation, you can figure that out. And I would just push everyone on this call, have some tax strategists that you have relationships with, that you're referring business to, and they're referring business to you. You know, as mortgage coaches, as everyone on this, you're not just loan officers. You're helping people build wealth with real estate. You're helping people, like the goal is not just to get them a loan, it's to help them achieve financial freedom through real estate. So want to make a note of that. Also, just, you know, a concept that, you know, I became one of the top 50 loan officers in America because I had a lot of CPAs. Some of them were tax strategists. Most of them were CPAs. I had a lot of financial advisors. And so every time I helped a customer, I consistently asked them, you know, on a scale of 1 to 10, how happy are you with your CPA or your accountant? And if it wasn't a 9 or a 10, be ready to refer them. How happy are you with your financial advisor? Scale of 1 to 10. And if they're not like, oh, they're amazing, they're a 9, they're a 10. By the way, when they said they're a 9 or a 10, I was always like, hey, do you mind introducing me to them after we do this? I want to make sure they're updated. So I was either, every single person I'd meet with, I was either 10 to 20% of the time getting a referral to their 9 or 10. And 80% of the time, I was positioning them as, hey, you really should talk to I didn't use the word tax strategist back then, but I would going forward after hearing you say it. So just guys, make sure that you're really using what you just heard to build relationships with financial planners, CPAs, and that you have a tax strategist. Any thoughts on that, Barbara, before we go to the next topic?
Well, and the relationship is twofold, right? So you can send us clients, but like with Soci, right? I love sending our strategy clients to Soci because I know that he's going to take care of them. I know he knows how to look at tax returns. I know that he can usually qualify a business owner. So like I have sent him millions of dollars worth of loans because he does the same as well, right? Like, not that it's like a tit for tat thing, but it's like he knows I will take care of his clients and I know that he will take care of mine. And they're always so happy. And it just like solidifies, it kind of like makes your relationship stickier with your clients because they're like, wow, if Barbara knows this mortgage person, I bet she knows a financial advisor. I bet she knows a real estate agent. And it's just stickier and they last longer for clients, you know?
Cool. So Deborah, I'm gonna, save like the third quarter, the fourth quarter of this call for you just to drill down on social media. But before we flip the switch to that, I think I told you about a nonprofit, First Home IQ, where we really believe all 16-year-olds need to know about budgeting, savings, and how compound interest works. All 18-year-olds need to know about credit and how credit score can impact your life. And then by 21, we've always had the curriculum at First Home IQ that every 21-year-old should know about how real estate appreciation works with a mortgage. And then, so there's like this financial literacy going through high school and college that we think everybody should have. And then first-time home buyers, like every first-time home buyer should know X, Y, and Z. So do you mind working back, like where, like now that you've had this journey of, you probably, it sounds like you didn't want to be a CPA at 18 but just regular folks, like what should every first-time home buyer know? And then at what stage in the development of someone, by 21, old enough to drink, they should have literacy in all these things. What would be your just top of the mind checklist of financial literacy and tax education or milestones people should have?
Yeah, I mean, I love talking about like kids and finances and kids and tax first, if I could.
Go.
So like our 6-year-old, right, has a credit card, as most of your kids should have credit cards. Now, you don't have to give it to them to use, but if you give them a credit card before they're 18, right, their credit history is going to be longer. I'm still getting pinged on my credit at 34 that like my credit history isn't long enough. And I'm like, come on, I have dozens of homes and like, you know, whatever. It's crazy. So if like your kids can have a longer credit history than you can, start with that. But also like just talking with your kids about business, about loans, like they're like sponges. They will get it eventually. They might not get it right now, but like our 6-year-old, he knows when we're rehabbing a property, he's like, Mommy, this property we're turning it into a safe property for a new family to live in so that it's safe now, right? And it's like, yeah, that's what we're doing. We're helping other families have safer places to live. And, you know, then he can learn how to fix the toilet and all of the things with rehabbing a property. He doesn't need to know like rental income and depreciation and cost segs yet, but that will come eventually. So just like bringing your kids along on your journey, I think is really important. And then kind of pushing the more creative aspects, like he doesn't get money for chores, but he'll get money for ideas. And so if he comes up with a new business idea, you know, for a 6-year-old, maybe that's a lemonade stand. You know, that's not a really new idea, but to him that might be new. Or, hey, I want to sell my toys this weekend and I'm going to use that money. He always wants to buy other kids' toys. So he's like, I'm going to use that money to buy other kids' toys. And so as much as you can, like just help them monetarily with like creative stuff, inspiring them, taking them on your journey. And then I think at like 12, they should start learning about taxes. And this could be like, if you are giving chore money or maybe they have a job, make sure you're taking taxes out. Now, you don't have to spend that tax money. You could put it in like a savings account for them, but they need to start knowing like 40% of whatever you make could go to the government if you're not smart about it. And they're going to, even at 12, they're going to be like, man, I don't like that, you know, $8 of my $20 you just took away for taxes. And so that'll start getting them to think on like, how can I save in taxes? And really like knowing the value of things at 16. So not just like giving them a car and, you know, they should probably earn their insurance and gas money and all of that. But I could go on and on about kids. I'm actually coming out with like a family.
Keep going, girl. I mean, you're killing it. You're teaching me all kinds of things I hadn't thought of. Now, of course, my kids are older now, so it's like, you know, that, you know, I feel like I did a good job, but you've given me ideas that could have been better. But keep rolling. We got another, you know, before we get to social media, you can roll some more ideas at us.
Yeah, I also really like as our older kids get older, like we have 14, 12, and 6 are our kids' ages. So the 14-year-old can start investing in our properties. Now, I'm not going to put them on title because, you know, I want them to get our properties when we pass away. Not right now, but they can use, you know, the $100 from their birthday money to have a percentage in our rental properties so that they can then get a percentage of the profits from that. So they start learning business ownership and, you know, if you own 1% of a company, this is what could happen. But also if the pipes bust, like you're going to have to pay, you know, your 1% of expenses too. And so again, just like trying to involve them in as much as possible. And I don't know what your guys' opinions on college is. I mean, I went to college, I have my master's degree, but I don't really care if my kids go to college or not, but we're still saving in case they want to go to college. But if they don't, like we're going to use that money to buy them a business or invest in a business so that at 18, they're not just like messing off and not doing anything. It's like, okay, you want to take that 50K instead of college. Let's like buy an HVAC company for 50K down payment, right? And then they learn more about business. And then for anyone with kids, I love the strategy, and you guys probably do too, but like the 5% down with a quadplex right now, I think is like the best deal out there ever. So if you have kids that want to buy a house, help them buy it, but get a quadplex so that they live in one, and then they learn how to be landlords with the other 3. And then it's hopefully not costing you any money because hopefully it's cash flowing. So if you helped them, the rent can either pay you back from helping them, or it, however you want to structure it with your kids. But I think that's like so good. Or if your kids are going to college, like don't pay for the stupid dorms for them, or like don't pay astronomical rents. Like get a quadplex wherever they're going to college, have them live in one, rent out the other three. You can keep it after they leave and move to a different city. So I love that for kids and first-time home buyers. I mean, we house hacked in our first home. Our first home was like 200K and we could barely afford it. And we rented one of our bedrooms out furnished on Airbnb, and we had some weird people stay at the house. So like might not be for everyone, but like that's what we did when I was trying to pay off my student loans and credit card debt that I had at the time. And so you just get scrappy. So for anyone like trying to save up money or pay off debt, like we did so many things like that, like house hacking. My husband worked for Uber and Lyft, and like I sold all my stuff on Poshmark, and you just kind of do whatever you need to do.
Oh my God, this is so good.
Don't you feel like there's, oh, go ahead.
Oh, you go ahead. You go ahead.
Don't you feel like there's a lot of younger souls out there because of the evolution of social and how we can learn from individuals like yourself, that they're doing these creative strategies to, let's face it, just make it, because inflation and cost of living is so high right now that they don't even know how to then report this stuff for taxes. Like they don't even, I think they don't even know to go to a true tax professional to help, which could then also hurt them when it comes to qualifying for a mortgage later. But there's a lot of creativity going on from like 18-year-olds to 25-year-olds that are doing multiple jobs and selling digital products, or again, influencer marketing that, or renting out a room. We did the same thing early on, and I had 4 toddlers at the time, and we were renting out a room for Airbnb. And we would have these college students who were at the local hospital. They would usually come overseas, and the parents didn't want them, like at a short-term rental or a apartment complex where they didn't know anyone. But we were making $1,000 every month. I was like, hey, at least pays a little bit of our property taxes in Texas. It's crazy what you can, come up with when you're creative. But I do think they don't know how to then report these things the correct way for taxes.
Totally. Yeah. And you see a lot of it when you're looking for it. Maybe it's just me because I'm a tax person, but like if anyone's ever like, oh, cash only or Zelle or Venmo, I'm like, I know what you're doing and you're not reporting it. Not that I'm going to say anything, but yeah, a lot of that's out there. And another like industry that we want to break into as well is all of the college athletes, right? That can now start getting paid. Like one of our employees, she's 24. Actually, we just helped her with Soci to get her first house. So that's really cool. But she was a college athlete, and the new rules started like the year she graduated, and she had friends that they were given cars from these car dealerships, and those kids had no idea that then on their tax returns, they had to report $50,000 of income because that's what that car was worth. And now they're stuck with this $10,000 tax bill that they have not saved for, right? They weren't given money. So it's not like they could have saved an amount of money to then pay the IRS. But yeah, these kids just like don't know that these sponsorship deals can cost them money. Or like anytime you're given something for free, quote unquote, like I don't know, some like chip company gives you a box of chips, like you're supposed to report that on your tax return because you got something in the eyes of the IRS, like it was worth an amount and you have to report it. And yeah, a lot of people just like don't know. And unfortunately, these college athletes are going to get screwed.
Well, this has been enlightening. You've given so much great content. I'm definitely going to want to do an interview with you and Soci and really break down that fourplex or duplex, but the idea of kids, as soon as 18 when they go to college or don't go to college, but they start their adult lives.
Yeah.
But within that period, getting your first property, either house hacking or units, I truly believe in. And I want to arm the entire Mortgage Coach community with, here's how you use Mortgage Coach to do it. And here's what a tax strategist says around that. So stay tuned on that interview. Before I hand it off to Deborah and we just focus on, how, you know, being an advisor and leveraging social media. I want to hear your best practices on that. But before we do that, I want to, you know, you gave some playbooks for families to, you know, help their kids get in that duplex or triplex. I want you to speak directly to parents and grandparents, because there's never been more equity in America,
Mhm.
and it's never been harder to get that duplex or triplex.
Yeah.
So what advice would you give to parents around how they build a home ownership plan for your kids? Because you talked about how you're developing
Mhm.
kids to, you know, get their credit at 6, you know,
Yeah.
have them invest in family businesses, but speak to the next generation, whether they have young kids or whether they,
Mhm.
hey, they're listening to this, their kids are 30 and they don't have a house yet.
Yeah.
Give advice to parents and grandparents on how to help the next generation get into homeownership and why they should help the next generation get into homeownership.
So this is what I would do. Now, I'm not going to tell anyone ever to like pull equity out of their house or get a loan or invest in something if it doesn't make sense for them. But this is what I would do. Let's say if I was 50 and I had a 20-year-old that doesn't own a house yet. My house probably has equity in it. And so you can take that equity out in a few different ways. And, you know, you guys are the mortgage experts, so you can give different scenarios there. But let's say you have $200,000 that you can get out from your equity. Well, the cool thing about equity is that it's tax-free, right? Like, when else in your life do you get tax-free cash in your bank account besides when someone dies and you get life insurance? Like, hardly ever. So take advantage of these loans. It's your money anyway. The bank is using your money to make money off of you. So like, make money off yourself. Um, Plus, I love pulling equity out for liability reasons because I personally don't like when houses are paid off. Because in case of, let's say, your 20-year-old gets in a car accident and that car is under your name, the attorney that's representing the other person in the accident, the first thing they're going to do is look your name up, and they're going to either see that you have a loan or you don't have a loan. So if you don't have a loan, they're going to be like, sweet, they have a paid off house that we can go after. Or they see, oh, they have a loan. So maybe they're less likely to go after you. But I digress. Let's say you pull out 200K in equity. You're going to use that 200K, which is tax-free, to, let's say, buy an $800,000 quadplex. So that 200K, typically you need $25,000 or 25% down on an investment property. So you can get 800K. It's a quadplex. So your kiddo can live in one and you'll rent out the other 3. Now, depending on your tax situation, let's say we can cost seg that property, a cost segregation. So that means we can accelerate the depreciation on that property. And on 800K, well, really 600K because your kid's living in one, we could get you an estimated $180,000 in depreciation in the year you buy that property, which means we could offset your taxable income by 180K. So you just saved a boatload of money in taxes. You helped your kid get into a property. You're teaching them to be a landlord, and you get the tax benefits for it. And that loan that you took out was completely tax-free. So like, in my eyes, why is not every person in America doing this for their kids? I think they just might not know about it, but yeah.
Now, what about if you bought the home in an LLC, you know, so you bought the duplex and you or triplex and it's in an LLC, can you still do the same thing?
Yeah.
Wow.
Yeah. And I love rentals actually in an LLC. So that's even better, right? Because that's protecting in
Yeah.
case, like, you know, a tenant trips on a rock at your property or something.
Got it. All right. So check that box. So let's try to do these questions in 5 minutes. So Deb has a full 15 minutes on social media. So Brendan Bracken said, are you aware of how to use the classification real estate professional to convert from, you know, unusable Schedule E passive to active? I mean, I know you are, but speak to that real quick.
Yeah, that's one of our favorite things to do with clients. So if you're unfamiliar with the rules, real estate professional, I'm going to say rep because it's a lot easier to say. Rep is an election on a tax return that says as long as you can get through a few hurdles, you can take your rental losses and offset your other active income. So generally, rentals are passive and your business income is active, and they can't offset each other unless you have short-term rentals, you make less than 150, or you're a real estate professional. So to qualify for rep status, you need to spend 750 hours a year in a real estate activity. There's 11 different industries that can qualify. Typically, it's like a real estate agent, someone in construction, remodeling, like anything to do with houses and rentals and
Can
properties.
it be marketing for real estate agents? Or
No.
Darn.
Yeah.
I
Property
know.
manager.
Property managers count. So 750 hours is hurdle number 1. Hurdle number 2 is and more than anything else. So you can't spend 750 in real estate, but then go spend 1,000 in marketing. Okay. So it has to be 750 and more than anything else. And then you have to hit material participation in the property. So let's say you own 3 properties. You have to either, and there's 7 different ways you can hit material participation. I'm just going to go over one. The most common one is 100 hours in the property and more than anyone else. So let's say you spend 100 hours in each of those 3 properties. So now you hit rep status. And that's great because then we can cost seg your properties, accelerate the depreciation, and then that depreciation lowers your other business income or your W-2 income. You save money in taxes. If you can't qualify as a rep, we really try to have a spouse qualify. So maybe you have a stay-at-home spouse or someone that works part-time. They're great people to use to try to get to rep status. So like, although my husband and I both work in the business, I cap his hours at 3 hours a day so that he can spend 5 hours a day in real estate. So he hits the 750 and more than anything else. So he manages all of our properties. But it's one of the best tax elections out there if you can qualify.
All right. Love that. And then let's see, most of us as loan officers in retail are paid W-2. We need additional tax strategies to offset ordinary income, rep, investment with properties, oil and gas, business ownership, and bonus depreciation. 2 minutes on that, and then we're going to transition the topics. Just want to honor some of these questions.
Yeah. So if you are W-2, first thing I would say is ask if it's possible to be a 1099 in your company. Or if they don't want to do that, maybe some of your income can be 1099 income. So maybe you have a salary and then you have 1099 commission or something like that. We've had a lot of mortgage clients that are able to do that, which is really cool because once you're 1099, you have a business. And that's what you want. Like that's how you save a ton of money in taxes is when you have a business, because now you can write off all the things in your life, right? Like your vehicles, your travel, your meals, all the things. Or you start another company. Maybe you have a marketing company that you start that markets for your mortgage W-2. So we've structured it that way for a lot of loan officers where maybe you have a marketing company, your spouse can open up a marketing company. So your loan, and I could be using the wrong term, so I'm sorry, but your mortgage company can pay your marketing company, let's say $5K a month to market for you guys because it's in your budget and you guys have a P&L that you can work off of, a budget every month usually, right? So that's how I would structure it. But if you really truly can't open a business, you can't get to 1099, then maybe have your spouse do that, own some real estate, or yeah, you'll have to invest in like oil and gas or something like that.
Yeah. And by the way, we're not giving tax advice and most LOs cannot, they need to be W-2, but all of that said, she gave a number of ideas, with a spouse, with a partner, start another business. A lot of folks, I believe more than ever, all people in mortgage and real estate are entrepreneurs, mortgage entrepreneurs, real estate entrepreneurs. So Deborah, why don't you ask any questions you have around how she's done what she's done or what she thinks about social media and all that.
So real quick on Dave, you may think about this with first home IQ, but I feel like school kind of brainwashes kids. I used to be a teacher, Barbara, back in the day, but we focus on teaching kids to, go to college and then get a job, a job. There's not a real push or education of becoming a business owner. So I love some of the ideas that you gave that you're doing just with your own children. it was something I learned too late that I could even put my kids on payroll. I have 4 little ones. And so I'm like, oh, tax write-off, I'm going to,
Yep.
employ you guys. But speak to the fact that, you're an accountant, so you're very numbers driven, which is very similar to mortgage professionals. A lot of them get so either in their head or they overthink short form video. They get nervous of putting themselves out there. Did you ever have that? And if so, how did you get over that?
Yeah, I still get nervous to this day. And like, I've probably had 50,000 stories on Instagram before, and I've spoken on hundreds of stages. It still just happens. But you also just have to know in your mind, like, if what I'm saying can help one person, who cares what I look like? Who cares if I mess up? Who cares how many times I say like or people actually like that now because they know me, they know my personality, and they come to my stories to know that it's not scripted, it's off the cusp, it's what's really happening right now, and they get to know how I really speak or talk or act. Because if it's too scripted, like, people know it, and they're gonna be like, oh, that person's just trying to sell me something, right? So it's kind of like you have to know your value and trust that one person will learn something. And you just kind of have to be like, oh, whatever. Like, I know it's not perfect, and that's okay.
I think so thank you for that. I think that's one of the biggest hurdles that a lot of people face. And then it's two, they question, is it worth it? Like, what's the ROI? How do I know if it's working? And sometimes the way that they measure the score or the success can sometimes be off. And I often tell loan officers, it's very similar to when you have a client say, oh, the lender down the street said I could get a 4% interest rate, when you're like, yeah, but what you don't realize is you're paying points to get that rate. And so a lot of times they assume, or they only measure success by likes and followers. Will you speak on how you personally measure the ROI and what business you are getting from social accounts, and which social accounts have been most successful for you?
Yeah. I mean, first I'll say, like, don't get caught up in the vanity metrics, because we were a 7-figure business before I had 1,000 followers. Like, and just from experience, I see everyone's financials, right? Every single business owner that comes to me, I know how much money they're making. And let me tell you, the more followers people have, typically they're making less than the people with less followers. It's like all these influencers that have bought followers, or it's not organic or whatever. They're not actually making as much money as you think. So don't get caught up in the metrics.
And just to
Also,
pause on that, I don't think a
yeah.
lot of people know that you could buy followers and buy likes and
Mhm.
views. Like, there's a lot of people stuck in comparisonitis or perfectionism because they're comparing themselves to something that's not even real because it was bought. So
Yeah.
anyways, wanted to echo that.
Yeah. And there's ways you can check if people have bought followers and all the things. But also, who cares if you only got 12 likes on a post? Like, if you got 12 new customers or clients, like, how amazing is that? So you don't need hundreds of likes or thousands of likes. I actually I did a whole masterclass on why I hated going viral. So we went from like 100,000 followers to 225,000 overnight because we had a video go viral about kids becoming millionaires, and it got like 20 million views. So we got 125,000 followers overnight, and I hated it. My engagement dropped. There were so many trolls. The people that actually followed our stuff were not our ideal clients. A lot of them were from Canada or other countries, which was also weird because, like, we can only help people in the US or expats that have to file in the US. And so, like, there's a lot of negatives to going viral. So that's not your goal. Your goal is to not get likes or follows. Your goal is to get clients. So only speak to who you want to be your client, And even if you got 20 likes on something, like if you were in a classroom of 20 people, that's really cool.
I
Well, and I
love,
love that.
I got to call this out. I love what she said. Like, don't worry about your likes and follows, care about clients. And then I love your metaphor. Like, if it's 20 people that are, your prospect or your customers, you just spoke to a room of 20 people.
Mhm.
I just had to put an exclamation mark on that.
Thank you.
Well, that was something I spoke on at the Modern Mortgage Summit about going deep and not wide. And there's, I get a lot of questions where people are asking essentially how to trick the algorithms and, using trending audio and trying to get more reach. And I just want to remind everyone listening that usually your best referral is in the cell phone of the person that you're serving right now. If you would just focus on going deeper and serving them at the highest level. Instead, we spend so much time, money, energy, effort going after complete strangers and then hoping and praying the algorithm shows that piece of content when you're also competing with 50, 300 other posts every second.
Right.
So it's not about tricking the algorithm. It's getting really clear on who do you want to be seen by. And to your point, you could, and I usually give this analogy where I could post a half naked pic on social and get a bunch of views and go viral, but it's not of the right eyeballs. And so trying to do all these tricks, it's like, for what? If you have people overseas that then end up following you or liking and commenting it, are those your ideal people that you're going to help? Like, no. So do you do anything with running ads or paid advertisements or lead magnets? Like, what's your strategy to go from following to then either an email list? Because what I've been telling my clients is, we don't own our social media. That's not an owned distribution channel. So ultimately we want to convert them to an email list if we can. Do you do anything like that? And if so, what is it? Share the tea.
Yeah. So we don't do paid ads or anything. All of ours is organic, or, like if a post goes viral or whatever, but we're not paying for that. So I want everything to stay organic because, again, I just want it to be like our ideal client. And I know you can like have ads that are targeted to certain people. I know nothing about ads. It's not my space. So like, I just haven't spent my money on it. For me, it's like, I'd rather put the money that I would have spent into ads and just create more content that I know will speak to the people I want to speak to. So our strategy is, when they're following us, I'm hoping that then they're watching our stories and seeing our posts. And from our posts, we're using a lot of ManyChat. If people are not using ManyChat, that is like the coolest, best thing you could be using right now. Because it's just such an easy way to like interact with your clients, engage with them, but also get them to do what you want them to do. So like, if you're like comment travel on a post, like the person comments travel, and then my DMs send them a travel guide on like how you can write off every single trip that you go on when you own a business. So, but to download that guide, I just got their email, their phone number, and their name. To like what you're saying, we want everyone on our newsletter list because we send out a newsletter every single Wednesday at 8 a.m. Our click-through rate is 70% on our newsletter, which is really, really, really high. Industry standard, I think, is like, I don't know, 20% or something. Because they know our newsletter is going to give them like juicy nuggets on how to save money in taxes. Or it's just me talking about, like, I took our 30 employees to Mexico last week. So like, people just want to know certain things. But yeah, you have to get them off of social media because, like, we saw a month ago, Instagram was down and everyone was freaking out. And it just reminds you, like, you don't own those followers. You have to get them to a newsletter in case like all social media goes away, or like the TikTok ban that everyone's freaking out about. It's like, well, if you have your TikTok people on your newsletters, it doesn't matter if TikTok gets banned.
Well, and I have to point out on your website, I noticed one, I love how just conversational, like you want to learn how to save a shit ton of money on your tax bill. Like that's on your main website. Like,
yeah.
How many accountants would have that? Not many. But at the very bottom, I noticed you have an exactly what to say certified logo. So when did Todd and I are both certified guides where we went and we learned how to take the work deeper, and now we host our own certification. So I'd love to hear. Yeah, we just did one in California and we do one in Dallas in September. But when did you get certified, and was it with Phil in New York? And how's that helped you?
So one of our clients is Mindy Jones, and Mindy is a trainer as well. So My husband got certified by her in Arizona just a few months ago. And then I'm going to Phil in New York in September. So our podcast is getting promoted in Times Square. So we're going to be in New York to like film that. And then it's the same week of Phil's training there. So
Oh my gosh.
I'm taking a couple of my employees there too.
Ooh, awesome.
Yeah.
That's great. Anything else that you would like to share as far as your strategy? How do you come up with your content ideas? Do you batch create your content? How do you make it in like flow with your workflow of just your day job of doing tax advising all day? How do you make time for social?
First I'll say, because I didn't answer your question about like ROI on social, is it's a long game, especially like your industries too, because in taxes, at least, like some people aren't going to come to us until it's tax season. Some people aren't going to come to us until they have a trigger that really pisses them off. Like they get a letter from the IRS, or they know their accountant messed up, or, you know, some kind of like trigger pain point has to happen in order for them to come to us. But we have prospect calls every day where people are like, oh my gosh, I've been following you for years and I love all your stuff. And that's okay. Like you still have to put the content out there because you're like building this like snowball, and eventually they'll come to you as a client. And same with you, like people aren't buying houses every month. They have to be ready to buy the house or talk about buying the house or selling their house or whatever. And, you know, that might not be except every 7 years. So you have to keep doing it to keep building up your client base to have more of a chance to have people. But our content strategy. So now at this point, if I'm being honest, I have 4 full-time people that are doing content creation. So all I have to do is show up and record for like 4 hours once a month is my strategy. But when we started, and you know what my team does now is we look at it as an entire year. So we plan out an entire year of like, okay, we know every quarter we're launching a course. So then we have the launch period for that course. So maybe that's 2 weeks before and a week after. So we know that that month, let's say, we're not promoting anything else except that launch. And then we'll fill in our master classes. So those are free. So what are those topics that we're speaking on in master classes? So all of those posts that month for that master class should be on that topic. So like June, you'll see is all about travel because everyone's traveling for summer. So it makes sense for us to talk about how to write off all your trips because everyone's like, oh, I'm going camping to Yellowstone. How do I make that a business expense? So being really intentional with your social media, it's not just like a throw a noodle at the wall and hope it sticks. It's like what seasons are in your business. So maybe like, I don't know, is it springtime or summertime where people buy more houses? So maybe the quarter before you need to be talking about what to do to get ready to buy your first house, or spring cleaning, or like whatever, but be really intentional with it and try to batch create it. Because if you're trying to do a reel every day, like life is busy, you can't do that. But I schedule just 4 hours a month and get it all done and have a video editor edit it and someone post it.
Well, guys, don't forget June is National Homeownership Month. So I'd love to see mortgage coaches there in the community really showcasing the net worth and the appreciation value of what being a homeowner is and means. And then like we learned earlier, you know, how could you leverage that equity? Because I think a lot of times people hear that their equity has grown this amount, but they don't know what they could do with it. So there's a lot of nuggets just from this call that you guys could implement into your content strategy just for June. So thank you for sharing that.
Oh, wow. Well, Barbara, this has been awesome. I mean, we learned so much. You brought so much value. There's a lot of micro content we could pull from this. Everyone listening, I'm already seeing reactions. Give us a little reaction on what you thought of today's call. Hopefully Barbara will be willing to come back in, do the show again. I definitely want to schedule a call with you and Sosi and create some content around the whole quad duplex, but owner occupied, multiple unit properties. I think it's a big opportunity for the next generation, and it's a big opportunity for their parents and grandparents. So if I think I know the answer, but just what is the best way people can follow you? Kind of give your closing thoughts on how people can get more value from you.
Yeah, definitely follow us on Instagram at Your Tax Coach. If you ever have any questions about yourself, your clients, like DM me, it's me in the DMs. So although I have lots of content people, I like to respond to my people's questions. So always DM me. I'm happy to answer. If you have a crazy client question, I'm happy to help. And we have a course right off your real estate. So if you're just wanting to know more tax stuff about real estate, that course is amazing. And like we have so many loan officers and real estate agents that have bought it.
Cool. And that's on your website or
Yeah.
yeah,
Mhm.
at Your Tax Coach. So guys, hope you get lots of value from this. If you're watching this on YouTube, put your questions down below so we have more questions for the next time we interview Barbara. If you don't already subscribe to our YouTube channel, subscribe today. That way, every time we put a video in YouTube, you get it. Give us a like, share this with your mortgage and real estate friends. This has value to both. And then remember, guys, if you go to savageinsights.com, first couple links are always like what's coming next and whatever I think is the most important video of the week. I'm updating that every week at savageinsights.com. And then also make sure you're part of the text mobile club that I have. Once, twice, at least 2 or 3 times a week, I am texting out whatever I think you need to be to become an advisor, to become the ultimate mortgage advisor, be in that text club. So D Bird, any closing thoughts before we wrap it?
Just you guys know how to find me if you need help with your social media game. Like Barbara said, sometimes it's about leveraging other people to edit your content or post your content. So I ain't hard to find. Y'all know where to get me.
Did you get that ain't hard to find from Deion Sanders? That
Yes,
sounded like Deion.
I put that all the time.
I know you
Just
do. I'm just having fun.
Oh,
All right, everybody. This is a wrap. Have a great weekend. We'll see you next week.
Thank
Take
you.
care.